Hi, and welcome to Market Conversations. Just want to do a quick video on Alibaba. It's currently up 5%, and today is the second green day. Hopefully it does close green. We still have a few more hours left before the market closes. So who got in last week? If we take a look at a 1-year daily chart, we can see that it tried to break this resistance at 120, couldn't break it. Same thing happened in June, couldn't break it, went down, and then this was back in January, couldn't break that, and we hit a low of 80, which was a very strong resistance. And now we gapped up a little bit to 80, almost 88. So we do see a gap here, and hopefully it doesn't try to fill that gap, because that's what happened back in January. I was saying that there's a high possibility that the gap was going to get filled, and it did. You can see that there's a lot of volume today, and people are buying call options. Let's take a look here. We have 90 strike calls, 13,000 volume traded. So those were worth about $9 yesterday. They're worth $39 today. We don't know what tomorrow's going to look like. So if you're planning to get in today on call options, I would suggest getting calls further out in expiration date. That way, at least the stock can move in your favor. We have the May strike. We still see 9,410, which isn't too bad. And then if you go further out to July, people are buying these calls. The 100 strike, which is $500, pretty expensive, but the 120 is $179. So we take a look at this chart, and I mentioned that this chart is an inverse head and shoulders. So let's go ahead and take a look at what that means.
We take a look at the article here, trading the inverse head and shoulders pattern. If we don't go down here, it is an example of a bullish reversal pattern. This means that the price action and trend that occurred before this pattern developing was bearish. The inverse head and shoulder pattern often shows up at the bottom of a move in the market. That is not to say that this pattern cannot develop at the top of a market. It can. Similarly, we can see standard head and shoulders patterns emerge at the bottom of a move. The inverse head and shoulder pattern is one of the most powerful and consistent bullish patterns. Let's take a look at some components that make up this pattern. The pattern is made up of 3 troughs or 3 triangles. The left and right shoulders should be close to symmetrical, meaning they should be very similar in their shape, same time in price measurements. I found this to be very, very important, but often overlooked condition that helps increase the success rate of this pattern. Volume tends to decrease. Volume is highest on the left shoulders, then falls into the right shoulders. Patterns that have volume dropping on the right shoulder have a probability of becoming profitable. The neckline must be broken for the pattern to complete. The breakout above the neckline must be on the higher volume. So what does this look like? Inverse head and shoulder. The chart is Microsoft's 15-minute chart. The image above is an ideal inverse head and shoulder pattern that you could want to see. The left shoulder low is above the right shoulder. Volume decreased as the pattern developed, and the two shoulders are relatively symmetrical. So you see the left shoulder, the right shoulder, and head. A quick note about symmetry. It doesn't have to be exact. Well, you can see that with Alibaba, it is almost exact. There is a big difference between the standard head and shoulder pattern and the inverse head and shoulder. With the regular, we never take a trade until the neckline is broken. Attempting to anticipate the formation of regular head and shoulder is akin to chasing straights and flushes in poker. With an inverse head and shoulder, we can enter early.
So is this the beginning of a bullish rally? Let's find out. Hopefully it is. So we take a look at the news here. It says March 20th. This is what whales are betting on Alibaba Group. So we can take a look down here. We can see we have a few neutral trades and a couple bullish trades. So there are no bearish trades right now, meaning that people think this is the bottom. And hopefully we can get back up to 120. Let me know if you think we're going to get to 120 in the next couple of months. And thanks for watching.